At this point of time, in our scenario, we do favor a strong dollar. That is to say, it would be possible, in fact, to see the parity with the euro in the months to come.
Hey Patrice, and thank you for joining Dukascopy TV today. It's a pleasure to have you here.
Morning, nice to be here.
So let's get started. What does the US growth outlook look like, and what are some alternative scenarios that we might see in the coming months and years?
Yes, at this moment of time, the situation is in the US is very positive, because we have seen the latest figures coming in terms of GDP growth have confirmed, in fact, a 2.5% growth trend, notably in domestic demand. So at this moment of time, we are pretty confident on the outlook on US growth, and of course, we are still waiting for fiscal measures to be implemented. That is to say, more precisely, we do expect a lower taxation, more infrastructure spending, and of course a deregulation process that could boost further, in fact, the domestic demand. Of course, there are risks. The first risk is also related to the new developments coming from Mr. Trump's policy, is related, in fact, to migrants and of course to trade policy. And an alternative scenario could be how the Congress will implement, in fact, these new policy, that is, say, in terms of time of implementing this measure and in terms of magnitude.
Mm-hmm. And so moving on, how, in this kind of environment that we've got at the moment, how do you think that the Fed should be reacting to that?
Yes, the Fed is now engaged in a tightening process. That is to say, the US Fed governors and Mrs. Yellen have confirmed that they are expecting 3 rate hikes this year. And in this environment, that is to say, in which we expect a higher level of growth, the 3 rate hikes forecasted by the DOTS and the FOMC could be seen during this year.
So you would definitely expect to see at least 3 hikes this year?
Yes, this is in our central scenario, and if we expect a pickup in demand and also a pickup in inflation and a pickup in wage growth, for instance, it will be justified for the Fed to continue to normalize its interest rates. Of course, the situation, if you compare the different strategy between the central banks, the divergence will stay in place. That is to say, the Fed will continue to hike, while at the same time the BOJ and the ECB and probably the Bank of England will adopt still friendly monetary policy and do not change dramatically their strategy.
Mm-hmm. And so is it possible going forward to have a weak US dollar as required by the latest administration?
Yes, this is a particularly interesting debate at this point of time, because what we have said about the US scenario and the Fed attitudes and the Fed strategy is in fact in favor of a strong US dollar. We have seen just after Mr. Trump election, we have a rally, not only in US equities, but at the same time, a rally in the US dollar. That is to say, we have a strong US dollar at this point of time. So based on economics strictly, this is in favor of a strong dollar. After, if the US administration wants a weaker dollar, we have to imagine some new decisions regarding the Fed decisions, that is say, to delay its interest rate hike. Or the problem on the US dollar could be to have some disappointment in terms of US growth scenario, that is said to Congress to delay any measure. So at this point of time, this is a sort of conundrum or paradox between a very sustained economic growth that support underpin, in fact, a US dollar strength. At the same time, declarations and speeches coming from the US administration in favor of a weaker dollar. But at this point of time, in our scenario, we do favor a strong dollar. That is to say, it would be possible, in fact, to see the parity with the euro in the months to come.
Patrice, thank you very much.
Thanks for your time.
And thank you for watching, and if you like this video and would like to see more, be sure to head over to dukascopy.tv.